The views and opinions of this program are those of the hosts, guests, and callers. There is substantial risk of loss in trading futures and options, which you should carefully consider prior to trading. Well, as we celebrated National Ag Day on Tuesday, the markets, for the most part, did not join in on the celebration. Pretty quiet overall. Grains and oilseeds mixed to slightly lower. Same goes in the cattle trade. Hogs under a little more pressure. Outside markets under some pressure. Just felt like a day without a lot of fresh news to drive the trade. We're going to talk about things, though. Joining us for a conversation, Corey Bratlin with agmarket.net. Corey, good to catch up with you again, and hope all's well. Thanks for joining us today.
You bet. Thanks, Jesse. Glad to be here, and everything's going real well.
Well, as I kind of mentioned, markets didn't have a whole lot of fresh news to go off of. A couple things of note. I'll start with the latest on the Russia-Ukraine war. You mentioned this to me before we went on the air. I saw Kansas City wheat trying to rally again at mid-session, then kind of faded off the highs, but it sounds like President Trump and Russia's President Putin agree that the war needs to end with lasting peace. They've agreed to an energy and infrastructure ceasefire. Just getting some of these details, but it seems like that might have given wheat a reason to back off. What do you think?
Yeah, it is, Jesse. It's a limited ceasefire on the infrastructure and the energy infrastructure in Ukraine. But it's a step in the right direction. If they want long-lasting peace deal, this is the first step. Okay, we're not going to get a for sure deal the first time they talk. So it's a step in the right direction. And yeah, that does cause a little bit of negativity to this wheat market. Kansas City wheat has had a heck of a run here the last I'll call it 3 weeks. They've rallied about 75 cents off their lows. And we're still sitting, technically speaking, still above, the 100-day, 200-day moving average. So still, I think it's in a very nice position. This could be just a little bit of a correction, but if we do start seeing a peace deal starting with the energy infrastructure, that could result into a little bit more grain getting shipped out of that Black Sea region, where it's been kind of a tough area to get some grain out of here the last few years.
Well, I know this KC wheat market, you can maybe talk about what you're seeing on these charts. It looks like that has really been the support behind spring wheat and Chicago wheat here in the last couple of weeks, especially with the dryness concerns added in the plains. I mean, talk about chart-wise, when you look at the whole wheat complex, which sub-segment is kind of the leader? Is it truly KC wheat right now?
Right now, it has been Kansas City wheat with the winter wheat coming out of dormancy down south. We had that big storm system come out of the Rockies, but where did it go? It went through a little bit of Kansas, Nebraska, over into Iowa, up through Wisconsin and east. It really missed, the bulk of North Texas, a good portion of Oklahoma, and it missed all of us up here in the Dakotas for the most part. And our winter wheat acres aren't that big, but when we look at the fund position, funds are carrying like around 49,000 contracts short of Kansas City wheat in lieu of them being a record short of around 58,000. So we're near record short position. Once you get above these 100-day, 200-day moving average, especially the 200-day like we have, this is going to cause these funds to buy back some of this position, and rightfully so. Now the market's a little concerned because we've got a couple more weather systems coming out of the Rockies here the next few weeks. We'll see if how that next one treks. It looks like the next one's going to trek kind of more Montana, Wyoming into western South Dakota, and might miss a lot of that area to the south again.
It's going to be interesting to watch the weather here as we move forward the next several weeks. I think these markets and the grains in general, we got spring planting. We also got the end of the month USDA reports, and we got the tariff talk on April 2nd. Feels like those are maybe the three legs of the stool that are going to be watched closely across this grain trade here. Corey, would you agree?
Yeah, I would. Obviously we've got the planning intentions here at the end of this month. But secondly, as soon as we see those acres, we're going to ship our focus right to the weather in the U.S. And boy, we had our good friend Eric Snodgrass on our fundamental video yesterday, and nothing's really changed. There's still some time, but we're going to be planting corn here in 30 to 45 days in a month of the U.S. and it's under some dry conditions, which it's going to be good for planting. But we just don't have any subsoil moisture underneath to get it going. So.
No, we definitely do not. When you look at the corn to bean charts and you look at that corn bean ratio and more, and I know we touched on this a bit at Commodity Classic when we talked, but I mean, what's the latest there? Is it kind of like the weather? Has not a lot really changed when you start thinking about that spring acreage and the battle between corn and beans, Corey?
Yeah, nothing has really changed. I think in general the producers are still going to plant more corn. That's the most profitable. That at least they can keep their money together. Soybeans, we talked to a lot of people down at the Commodity Classic in Denver, and it just boy, we need to have $11, 11.50, if not $12 cash for soybeans, and we just don't have that today. So no, I think as far as chart wise, I've been seeing just corn and especially soybeans. We're seeing some smaller range days here. We're just kind of consolidating, kind of coiling up in here. We got the corn is kind of decided to settle in between the 100-day and 200-day moving average. Soybeans just underneath that, but soybeans are kind of stuck in this May soybeans, 990 to 1030 kind of range, and we're getting, like I say, smaller ranges. Of course, we don't have a lot of new news out there. South America. Brazil is over 70% harvested. Argentina is just getting going on harvest. The safrinha corn crop in Brazil is pretty well planted. Last couple percent, so we'll get put in here this week into next week. So I think to me is Jesse, the focus is going to get shifted here on this weather here, both South America and U.S.
I've been noticing December corn futures, for instance, has kind of been struggling with this 454 mark. I mean, you take a look at that chart specifically and thinking about that main new crop corn contract. I mean, if we could get above some of this resistance type area, it seems to me. I mean, you think it opens us up to the top side at all here, Corey? What do you think?
Yeah, we have very little weather premium built into this new crop corn. And 95, if I don't know what the acre is going to be, but if we do plant 95 million acres, we got to have a good trend line yield in here to replenish these supplies. So I think we got to build somewhere in here, even with those higher acres, we're going to have to build in a little bit of weather premium. That probably takes us back up to our contracts highs, which are up in that, 479 and 3/4 range. I believe in here this spring, we missed the elusive 480, but I think we can add a little premium in here as long as the weather stays dry and starts to warm up.
The bad thing, you think about futures, kind of that 450 mark, but then you look at cash, and I mean, bids and basis is still kind of struggling. I see plenty of threes on the board in parts of the Dakotas and, low fours. I mean, you look at anything on the cash side, if that's the side of the market you want to try and play, it feels a little bit tougher than the future side right now on the corn market, Corey.
Yeah, cash. They're everybody, the processors, the end users, the commercial elevators, they're out there. They're looking at the same thing we are. If we have 95 million acres, and if we would grow a trend line type yield, we will have some space problems. So they are bidding that reflectively in their new crop bids. So but with that, if we start talking a big carry out, we're going to see the carry get put back into this market. So a 450, 460 December hedge. Yeah, that could turn into 465, 475 on the March. Typically, we see a basis appreciation after harvest. I think guys can kind of hold their money together at some just average yields with those prices.
We did see on Tuesday, USDA rolled out the details on this ECAP program, this emergency economic assistance. And I know that's opening up for, you can apply starting on Wednesday, and then mid-August is the deadline here. We've known about this for a while, obviously, now getting the details. I can't think that this is going to have too much of an impact on the markets here, Corey. What do you think?
No, it shouldn't. It's been talked about even before the first of the year. It finally, we thought we were going to get something done here by the middle of March, and we did. We got it done here today to where now we know that's when we can start to apply for it. And I don't recall the number specifically. It's around $35, $40 an acre for corn and soybeans. It sounds like they're going to send out some of the paperwork to each farmer based on their 2024 acres. So those that are listening, be on the lookout for that here pretty quick, and the sign up will be here soon. So, and my always recommendation is head to the FSA office and get this stuff taken care of sooner than later to avoid the big rush at the end. So,
Well, and I can tell you a couple of those numbers. I pulled them up in front of me. 30.69 for wheat, $42.91 for corn. It's 29.76 for soybeans. Sorghum's 42.52, and there's more numbers thrown in there. But to your point, doesn't seem like it's going to have a big impact on this market trade. And I like your thoughts. Head to your local FSA office and ask them for more information. We're talking with Corey Bratlin from agmarket.net here today on Market Talk. How about that livestock sector, Corey? A quieter day there after we had a really strong start to the week. Just felt like maybe a consolidation type of trade, especially in the cattle markets on Tuesday. What do you think?
Yeah, yesterday, Monday, we started out with a flurry. We had strong cash to end last week. They're still talking fairly strong cash market here today, in here to start out this week. So overall, I think the futures though seem like they might be getting a little bit extended here. But I keep thinking about that, Jesse. I think I bring it up every time we talk, and it's like I feel like these cattle prices are getting a little extended. But there's still a pretty good demand out there. The big thing we're going to be watching is can the Packers off-sell this high-priced beef to the retailers in the supermarkets and so on. If we see that kind of slow up a little bit, yeah, we could see these prices pull back a little bit. Packers, our margins are running in the red and have been for a while here now, so that could kind of hold things at bay in here. But boy, I mean, yesterday's action and today. We spent a lot of the day, 50 cents, 75 cents lower. We kind of come back mixed on the day. So as the last 10, 15 minutes a day, we saw, feeder cattle, we saw live cattle all kind of come grinding back to, being mixed on the day. So all in all, it was just kind of more of a turnaround Tuesday, just a slight setback is all.
Well, on that feeder cattle side, I know we set some new contract highs on Monday, and you think about just the incredible demand in the countryside right now. A lot of buyers know that spring turnout is just a matter of weeks away. It just feels like that feeder complex continues to kind of be the leader over fat cattle right now, Corey.
Yeah, feeders are, anywhere you talk, I keep track of some of the sale barns here in South Dakota, and they are blistering hot to say the least. It doesn't take much of an animal to go out and fetch you $2,400-$2,500 a piece, let alone now we gotta fatten them up and carry them for another 6-8 months in here. So it's definitely, to me, in my mind, from growing cattle, of growing up and selling feeder cattle, it's a seller's market in my eyes. So but they are blistering hot, and when we think that these cattle are going to break, they seem like they take that next leg up, and feeders are making new highs where live cattle got close to June cattle got close to a new high today. They got within about 10-15 cents of it, but those feeder cattle keep making new all-time highs here.
Looking at the outside markets too, I should ask you, stocks, more pressure there Tuesday. Crude was quiet. Any big things you're tracking in the outside markets here this week, Corey?
Well, I mean, the stock market being down over 10%, it has rallied back some. We're kind of wondering has this kind of hurt the sentiment of the consumer out here a little bit, and could that have a direct effect on our beef market or even pork market? Hogs have had about a $12-13 sell off, saw a nice $5-6 rally back. Now we were lower here again today, but so that's going to be there is some chatter talking about potential recession. We haven't seen anything of that nature yet, but it's not something like you can just see it one day and it's here. It takes a little time to evolve. So that's going to be my concern, kind of watching going forward. Do we see the retailers or the consumers start to back away from these high prices at the grocery stores?
Absolutely. Corey, any final thoughts you would share or reiterate with folks listening into the show today?
Yeah, just have some orders in place on these markets. They're going to be volatile with the day-to-day tariff talks. With we're going to continue to see these on again, maybe off again, potential limited ceasefires. This is going to be the nature of our spring and summer this year. So if we get a game plan in place and have these offers in and working.
Well, I know folks can reach out to you and the team there at agmarket.net. Take a look at your intel and much more very easily online. Just go to agmarket.net for more. Corey Bratlin, good to chat with you again, sir. Have a great week, and we will talk to you again real soon.
Sounds good. Thanks, Jesse.
Make sure to subscribe to the Market Talk YouTube channel. You can watch our latest interviews with top market analysts in the country, find bonus content, and much more. It's easy. Just go to youtube.com/@MarketTalkAg and hit the subscribe button. Or you can search for Market Talk Ag on YouTube.